Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind corporate filings. Today, we are diving deep into the latest reports from Trust for Professional Managers, a fund that manages several investment portfolios. So buckle up because we are about to decode what these numbers really mean for investors and the market. Let's kick things off with a look at the Jensen Quality Midcap Fund. This is a fund that aims for long-term growth, and we have a semi-annual shareholder report for the period ending the 30th of November 2025. First up, the cost of investing. Imagine you put $10,000 into class. Shares of this fund for the last 6 months. Your cost would be around $41. That is a pretty small fee to pay for managing your money. Now for the juicy financial numbers, as of the 30th of November 2025, the Jensen Quality Midcap Fund had net assets totaling over $132 million. That is a significant chunk of change, and it tells us investors have entrusted a good amount of money to this fund. It also held 40 different investments. The net advisory fee for the fund was over $431,000. This is the kind of money paid to the folks managing the fund's investments, and it gives us a glimpse into the operational costs involved. The portfolio turnover rate was 16%. This means the fund managers bought and sold about 16% of the fund's assets during this period. A lower turnover rate often suggests a more buy and hold strategy, which can sometimes lead to lower trading costs and potentially more tax-efficient investing. Looking at what the fund actually invested in the top holdings, give us a clue about the fund's strategy. Broadridge Financial Solutions Incorporated was a significant holding at 4.6% LabCorp holdings. Incorporated also held a 4.6% slice. Other top holdings included Encompass Health Corp, Equifax Incorporated, Keysight Tech, Knowledge Incorporated, Kroger Company, Ross Stores Incorporated, Tractor Supply Company, Clorox Company, and MSCI Incorporated. These are all established companies showing a focus on quality businesses. Now let's shift our attention to the Jensen Global Quality Growth Fund. This is another fund managed by the same team, but with a broader global focus. For this fund, a hypothetical $10,000 investment over the last 6 months would have cost about $52. This is slightly higher than the mid-cap fund, but still reasonable for a global strategy. As of the 30th of November 2025, the Jensen Global Quality Growth Fund had net assets of over $75 million, a solid amount. For a fund with a global mandate, it held 32 different investments. The net advisory fee here was around $214,000, which is less than the mid-cap fund, likely due to the smaller net asset value. This fund had a slightly higher portfolio turnover rate at 20%, indicating a bit more active management compared to the mid-cap fund. The top holding here was Taiwan Semiconductor Manufacturing Company Limited at a significant 7.4%. This company is a giant in the semiconductor industry, also showing a focus on growth. Oriented businesses. Other top holdings included Microsoft Corporation, First American Treasury Obligations Fund, ASML Holding, NV Alphabet Incorporated, Eli Lilly and Company, Aon PLC, Nvidia Corporation, Hermes International, SCAR, and Apple Incorporated. This mix of tech giants and other quality companies shows a clear growth investing strategy. Next up, the Jensen Quality Growth ETF. This is an exchange-traded fund offering a slightly different structure. Investing $10,000 in the Jensen Quality Growth ETF for the last 6 months would have cost you about $29. This makes it the most cost-effective option among the funds we've discussed so far, which is a big win for investors. As of the 30th of November 2025, the Jensen Quality Growth ETF had net assets of over $114 million. This is its largest asset base among the funds we're looking at today, and it held 27 different investments. The net advisory fee was approximately $212,000, which is quite competitive for an ETF of this size. The portfolio turnover rate for this ETF was 22%. This is in line with the other growth-focused funds and suggests a strategy of actively managing the portfolio to capture growth opportunities. The top holding here was Microsoft Corporation at a substantial 9.4%, Apple Incorporated followed at 9.0%, and Alphabet Incorporated at 8.1%. These are all leading technology companies: Nvidia Corporation, Eli Lilly and Company, MasterCard Incorporated, Meta Platforms Incorporated, Amazon.com Incorporated, Stryker Corp. Accession and Abbott Laboratories rounded out the top 10. This is a very tech-heavy portfolio, as we might expect from a quality growth ETF. Let's dive into the financial statements themselves, focusing on the schedule of investments. This is where we see the actual companies these funds own. For the Jensen Quality Midcap Fund, we see a wide array of companies. Gentex Corporation, for instance, was valued at over $3 million. This fund holds a diversified portfolio across various sectors, showing a broad approach to mid-cap investing. There was also a holding in the First American Treasury Obligations Fund valued at over $2 million. This is a money market fund, a very safe place to park cash, and shows a small allocation to stable assets, a common practice in most funds. The total money market fund holding was over $2 million. This represents about 1.6% of the net assets, indicating a small cash reserve for liquidity. Now let's look at the Jensen Global Quality Growth Fund's investments. Hermes International CAA Luxury Goods Company was valued at over $3 million. This highlights the global nature of this fund, with investments in companies across different countries. Their top 10 issuers show a diverse geographic spread. Taiwan Semiconductor Manufacturing Company Limited ADR was a significant holding, valued at over $5.5 million. This is a key player in the global tech supply chain. Aon plc, a professional services firm, was another substantial investment, showing the fund's focus on quality companies across different sectors. Now let's look at the Jensen Quality Growth ETF's holdings. Amazon.com Incorporated was a major holding, valued at over $4.7 million. This ETF definitely leans into the biggest names in technology and consumer services. Microsoft Corporation was the largest holding for this ETF, valued at over $10.7 million. This demonstrates a strong conviction in the largest tech companies. Apple Incorporated was right behind at over $10.2 million. These top holdings clearly signal a strategy focused on established leaders in the growth sector. Moving to the statements of assets and liabilities, we can see the overall financial health of each fund. For the Jensen Quality Mid-Cap Fund, the total assets were over $132 million, with investments making up the vast majority of that, almost all of it actually. The Jensen Global Quality Growth Fund had total liabilities of about $83,000, with a relatively small amount payable to its advisor. The Jensen Quality Growth ETF boasted net assets of over $114 million, showcasing its robust market presence. Now let's check out the statements of operations. These show the income and expenses over the reporting period. The Jensen Quality Mid-Cap Fund generated over $1 million in dividend income. This is the money earned from the companies it invests in, which is always a good sign. For the Jensen Global Quality Growth Fund, the investment advisory fee was around $258,000. This is a key expense for any managed fund. The Jensen Quality Growth ETF had a net investment income of over $159,000, which shows it is generating more income than it is spending after all expenses. This is a positive indicator. Next, we have the statements of changes in net assets. These track how the net assets of the funds have changed over time. The Jensen Quality Mid-Cap Fund saw a net increase in net assets from operations of over $432,000. This means its investments generated more than enough to cover its expenses and losses during this period. The Jensen Global Quality Growth Fund had distributions to shareholders from earnings for Class Y shares totaling over $7.1 million. This means a significant amount of money was paid out to investors. The Jensen Quality Growth ETF saw a massive capital transaction, with shares sold totaling over $57 million. This reflects active trading and investor demand for this ETF. Now for the financial highlights, these provide a per S-hair perspective on performance. For the Jensen Quality Mid-Cap Fund class, iShares the net asset value at the beginning of the period was $18.48. This is the per S-hair value of the fund's holdings. Class J shares of the Jensen Quality Mid-Cap Fund saw a total return from investment operations of negative $0.09. Per S-hair, this means that after all gains, losses, and expenses, the per S-hair value decreased slightly during this period. Class Y shares ended the period with a net asset value of $16.49, showing a slight decrease from the beginning of the period. The Jensen Global Quality Growth Fund Class I shares had a total return of 4.88%. This is a positive return, meaning the fund grew in value for its investors during this reporting period. For Class J shares of the Jensen Global Quality Growth Fund, the expenses before any reimbursements were 1.38% of average net assets. This gives us a picture of the full cost of managing the fund. Class Y shares of the Jensen Global Quality Growth Fund ended the period with a net asset value of $18.53. This indicates growth in the per S-hair value for this share class. The Jensen Quality Growth ETF demonstrated a positive total return of 3.86%. For the period, this is a solid performance for an ETF. The ETF also had a net investment income to average net assets ratio of 0.43%. This is a good sign that the fund is generating income that exceeds its operating costs. Now let's delve into some of the notes to the financial statements, which offer important context. The trust itself was organized as a Delaware statutory trust. it is important to understand the legal structure behind these funds. The funds value their investments based on last sale prices on major exchanges or NASDAQ official closing prices. This is a standard accounting practice to determine the fair value of their holdings. These funds use different levels for valuing assets. Level 2 means they are using observable inputs like prices of similar securities or interest rates, which is a common and reliable valuation method. The funds are structured to avoid paying federal income taxes themselves by passing those tax obligations onto the shareholders. This is a common strategy for investment funds to maintain tax efficiency. The trust has an investment advisory agreement with Jensen Investment Management, incorporated as the advisor for 2 of the funds. This is the contract that outlines how the advisor will manage the money. The expense limitation cap for the Jensen Quality Mid-Cap Fund is set to expire on the 1st of March 2027. This means the advisor might not be waiving as many fees after that date. There is a distribution and shareholder servicing plan in place for some classes of shares. This is how fees are handled for different types of investors, and it impacts the overall cost of investing. The Jensen Quality Growth ETF trades on the N-CSRS Incorporated, and it issues and redeems shares in large blocks called creation units. These are mostly handled in kind, meaning with a basket of securities rather than just cash. This is typical for ETFs and helps keep trading costs down. The report also details beneficial ownership of more than 25% of a fund's shares. This is a regulatory requirement to identify any single entity that might have significant control over the fund. Charles Schwab and Company Incorporated, for example, held over 40% of Class J shares for the Jensen Quality Mid-Cap Fund. Both the Jensen Quality Mid-Cap Fund and the Jensen Global Quality Growth Fund have lines of credit with us Bank. These are essentially short-term borrowing facilities to manage unexpected cash needs for shareholder redemptions. The Jensen Quality Mid-Cap Fund has a line of up to $20 million. Interestingly, the Jensen Quality Mid-Cap Fund only utilized its line of credit for 4 days during the period, and the average borrowing amount was relatively small. This suggests they did not face significant liquidity challenges. The report also touches on recent market events, acknowledging the significant volatility seen in both US and international markets, due to factors like inflation, interest rate changes, recession fears, trade tensions, and geopolitical conflicts. This is a standard but important disclosure highlighting the broader economic backdrop influencing the funds. Performance. So what is my take on all of this? Well, looking at these filings from Trust for Professional Managers across their Quality Mid-Cap Fund, Global Quality Growth Fund, and Quality Growth ETF, we see a consistent theme of focus on quality companies with strong fundamentals. The Jensen Quality Mid-Cap Fund and the Jensen Global Quality Growth Fund are managed with a more traditional mutual fund structure, while the Jensen Quality Growth ETF offers a lower cost, more liquid way to invest in a similar quality growth strategy. The ETF's lower expenses and solid performance are particularly noteworthy for the Jensen Quality Mid-Cap Fund. And Jensen Global Quality Growth Fund, we see decent returns for the period, which is encouraging, but the slight dip in net asset value. Per share for some classes in the mid-cap fund warrants a closer look, especially in comparison to the growth shown in the global fund and the ETF. The fact that the funds are well diversified with holdings in established companies like Microsoft, Apple, and Taiwan Semiconductor Manufacturing Company Limited suggests a strategy that seeks stability alongside growth. However, the substantial holdings in tech behemoths for the ETF and Global Growth Fund also mean these funds are heavily influenced by the performance of the technology sector. Any downturn there could significantly impact these funds. The lines of credit are there for good reason, but the low utilization during this period is a positive sign indicating the funds can manage their operations without needing significant short-term borrowing, which points to good cash flow management. Overall, these reports paint a picture of well-managed funds with a clear investment philosophy focusing on quality and growth. The ETF alternative is particularly attractive from a cost perspective, making it a strong contender for investors seeking exposure to these quality growth themes. Now, I want to hear from you. What are your thoughts on these funds, especially the Jensen Quality Growth ETF? Does its expense ratio and top holdings align with your investment goals? Let me know in the comments below if you found this breakdown helpful. Please hit that like button and subscribe for more deep dives into corporate finances. You can also join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and see you in the next Corporate Decoder episode.